Surf's Up. Learn to ride the F&O waves only on BloombergQuint with Agam Vakil.
Surf's Up only on BloombergQuint. I'm Agam Vakil, and just like always, we're here to get a perspective on the futures and options markets in Indian equities. Another week of consolidation, though no taking away from the fact that major indices did make new lifetime highs. Two aspects have been a part of this setup so far. One, the Nifty 50 range based on maximum open interest indicates a levels between 9,500 and 9,700 for now. And two, the India Volatility Index continues to trade near the mark of 11, which ordinarily indicates little anticipation of volatility over the next couple of weeks. Events, of course, can bring drastic changes to the VIX. There has been average participation from foreign investors and traders alike, so with the RBI policy and earnings behind us and with a fair idea of how monsoons are expected to pan out, let's find out what technicals and positions in derivatives are telling us. Joining us today and taking us through these trades this week is Ashish Chaturmohta, Head of Technical Analysis with Sanctum Wealth Management. Good morning, Ashish. Thanks for joining us. And starting off with your call on the benchmark indices for this week, what are you expecting from them?
Good morning, Adam. So as you rightly mentioned that in terms of data, clearly we are seeing a lot of, option distribution clearly at 9,500 and 9,700. But definitely looking into the broader, market participation, the entire, the bias is positive, and we feel that, markets are heading towards 9,700 levels. But my sense is the way, we are seeing the contribution from most of the large cap names. We feel that in days to come we are going to see this call writing, its price shifting from 9,700 to somewhere around 9,800, 9,900 levels, and that can lead to a stronger move towards 9,800 levels in index in days to come. In terms of support, I think on downside we feel that around 95.70, 95.50 we will see a very, very strong support coming to the market. So I think even if there is any some correction of around 50 to 70 points from current levels, that will be an opportunity to go long into the market for an upside target of 97.50 to 9,800 levels.
So positive bias as far as major indices are concerned. But Ashish, talking about the Bank Nifty too, are you of the same opinion?
Yeah, I think so, because if you look at most of the large cap, private sector banks, they are showing a lot of strength. Most of them trading near, all-time high, and a lot of them crossing 50 high, clearly indicating, that there is a good amount of strength being developed in most of the private sector, large cap names. And even for the PSU banks, we have seen a good amount of correction, and now there is a base building happening in stocks like SBI, Bank of Baroda, Canara Bank, and PNB. So I think that can lead to a stronger up move in Bank Nifty from current levels. We feel that overall Bank Nifty is going to see a stronger outperformance from current levels after a good amount of consolidation. So I think from these levels around 1 to 2% dip can be seen. That should be used as an opportunity to go long. But overall our bias is that Bank Nifty is going to see another 3 to 6% upside from current levels.
Great, Ashish. You have briefly spoken about PSU banks such as SBI and Bank of Baroda, but are there any ideas that you have right now that can be implemented at these levels?
So in terms of banking stocks or apart from banking stocks?
Well, it could include banking as well as non-banking stocks.
Okay. So first of all, I think so in the tire space we are seeing a lot of buying interest, and most of the stocks like let it be Fiat, Apollo, or MRF, they are seeing a very strong open interest resistance in last 2-3 weeks, and most of them trading near its all-time high after a strong consolidation. So I think stocks like Apollo Tires can see a move till 280 to 90 levels in days to come. One can initiate a long position at current levels and use any dip of 1 to 2% to average the position. We think that this stock has the potential to give another 4 to 5% from current levels. Apart from that, in the capital goods space, I think Siemens is one stock which has seen a considerable amount of open interest, but in terms of price activity, the stock is in a consolidation phase. So I think this is one stock where we might see 7 to 8% upside in days to come. So one can initiate a long keeping a stop below 1330, and upside can look for a target of 1470 to 1480 levels in Siemens. In the banking space, I think mid-cap private sector banks are showing a lot of strength, and within that space, I think KTK Bank is looking very strong. Stock has already crossed its 8 years high, and consolidating for last couple of days in a range between 170 to 178. I think this stock has a potential to cross 200 mark in days to come. So one can initiate a long position in KTK Bank with a stop below 170, and upside can look for a target of 200, 205 in KTK Bank.
There you have it, guys. Plenty of stocks to keep an eye on. But now I'm going to come down to Derivatives 101, and I want to remind our audiences that we are open and inviting questions. And the question for this week comes from Raman Shah, Ashish. And he asks, how do you read the India Volatility Index?
Yeah. So see, as far as volatility is concerned, first of all, it's India VIX. So there is obviously a negative correlation between VIX and the broader indices. If we see a sharp uptick in VIX, that is not healthy for the broader markets, and that can be an early sign or an indicator that markets might be overheated and can see some amount of profit booking. But if volatility is continuously coming down, that is a good sign for the market, and it indicates that markets are quite positive, and that can lead to a stronger upmove in the market. Now, as far as India with current levels are concerned, we are trading at a multi-year low, and this volatility is continuously coming down. In between, it did a sharp uptick for a day or two, and again started cooling off. That's a sign that markets are clearly, are in a positive trend. Until we don't see a considerable, maybe another 20 to 30% upside in VIX, the overall trend in the broader markets are going to remain positive.
Well, there you guys have it. But that is all that we have for Surf's Up. Thank you once again, Ashish, for joining us. And as for you guys, we'll see you next week once again on another edition of Surf's Up, only on BloombergQuint.